Welcome to the Investor Fuel Real Estate Investing Show, where I interview the nation's top real estate entrepreneurs, industry leaders, and other amazing entrepreneurs to help educate and inspire you to take your business and your life to the next level. My goal is to add tremendous value to you during every single episode of this show. If you get value, I'd love it if you subscribe on your favorite podcast player, subscribe on YouTube, and my very favorite, please share this with your community so we can impact even more entrepreneurs. Let's start today's show. Hey, everybody. Welcome back to the show. Today, we're going to be talking about how to be the bank, how to be a lender. That's usually the people that make all the money, or sometimes they do, but they not necessarily. There's no guarantees in life. But we're going to be talking with my buddy, Neil Timmins, who has a lot of experience as a real estate investor, veteran real estate investor. We've been friends for quite a while now, and has primarily focused on lending now. So, Neil, welcome to the show.
Mike, it's good to see you, man. It's been too long since
we were just talking about dates. I was like, gosh, dang, has it been that long? So, and it doesn't feel like it, but I guess the days start moving faster when you start getting older, I guess. I don't know.
That is the truth. Yes. Yeah.
Yeah. So, so you're out of the Des Moines area, and Des Moines, Iowa, that is. For those that don't know, that Des Moines is in Iowa,
yeah.
I guess. And I grew up, it's kind of, Neil and I have a little bit of a common thread here in that I grew up about 3 hours from there, I guess, right on the Illinois side right on the border of Iowa and Illinois. And so it's a small world up there. So I feel like we're basically neighbors. You're neighbors.
You're totally right. Yeah, just a stone's throw from here, right? Just in Iowa world, that's just down the road, man.
That's right. That's right. So. And now I'm kind of just down the road in Dallas, but it's one road. It's 35. We can just go
it is one road. Yes, you're totally right. Yeah.
It's just about 10 or 12 hours.
Yeah, I was going to say yes, exactly. Right.
Yep. So I want to learn a little bit about your background and have you share that with folks. And you've kind of evolved to basically kind of be in the bank now. And they always use this analogy of like, well, the biggest and prettiest and most expensive buildings in town are the banks, right? And so I think a lot of folks, you've done a lot of things, and then ultimately you just said, well, why not be the bank? Because they're the ones at the top of the food pyramid, if you will. I think you said that a minute ago. But tell us your background and kind of how you got to this point, I guess.
Yeah, 21 years ago. You talk about time flying. 21 years ago, I started as an agent, as a realtor, hawking houses, selling houses in 2004. So unbelievable when I think back to it, because I still remember the very first few days there, getting into the world, coming out of banking. Actually, I worked for Wells Fargo for a couple of years and then got into real estate. So my mom entered real estate ahead of me. She did so well her first year. She made twice what I made when I was working at Wells Fargo. I thought, well, darn, if mom can do that, I can do better. So got into real estate. If you've been I'm sure you've experienced it over your lifetime. You get to a place, you're like, this place just fits, right? This is home, and that's what real estate was for me.
Yeah,
killed it, rookie of the year, and then within 5 years, as the number one Remax agent in Iowa. So I brokered a few thousand of those in Central Iowa over my career there, and then at some point you make some dollars, and it's got to go to work. And real estate for me was the obvious answer, and so started fixing and flipping. Had to learn that, right? Because all I did was observe it from the outside.
They don't teach you that in realtor school.
They don't teach you a lot in realtor school, right? And so, had to learn that. So go through it, make some mistakes, then figure I can shortcut it and pay to learn some things and not have to learn it on the street. Join Fuel, and that's how we got to know each other over the years. Maybe arguably the best group that exists out there for somebody.
Hey, so, I didn't even pay you to say that.
No, I know. I'm indebted to you, and then so many friends that have come out of that over the years. So you don't have to ask me to say it. I'd say it behind your back because I think it's.
I appreciate that. Man.
Yeah, absolutely. Yeah. It's just a fantastic place, and so went on and learned a ton. Right, so fixed and flipped hundreds over the years, and I've done everything in that world. Assignments, double closes, novations. I mean the whole nine. Then eventually morphed into the commercial side. So again, it was like just like Monopoly, right? Get all the houses, and the houses turn into the hotels, right? And so. Yeah. For me, that ended up, I love Des Moines, so ended up with a whole bunch of various asset classes here in town, industrial, retail. We own self-storage in another city, mobile home parks. I mean, office. which the small office has been fantastic here for us. Just love that little segment
That's
for
great.
what we've got. Uh, and then off and on over the years, so I'd wholesale the guys, and you can go pull the archives of Fuel, because this is where I started doing this back in that era. So we're talking about 2019, maybe 2020, somewhere in that range. I'd wholesale stuff and I'd sell it to guys on contract, right? Guys would go, cool, I'll buy it, but I need money. And so that's what I would do. Sell it to them on contract, be the bank in that regards.
Yep.
And so I'd always lend money to guys off and on over a period of, I don't know, 3, 4, 5 years. And then about 18 months ago or so, we were starting on the office, and I was going, you know what? Let's go lend some more money. So let's create a brand, Little Guy Loans, which tongue in cheek, I'm almost 6.5 feet tall, so it's always
Right.
fun. It's always funny.
I didn't say anything about that, but I was like, little
Yeah.
guy, that's not you.
Yeah, it's always funny.
But you're
coming out of my
supporting
mouth.
the little guy, right?
You better believe it, man. Yeah,
Yeah.
we're not Wall Street. We're the guys who are competing against that, trying to get like just trying to stack dollars for all of us to win in
Yep.
this game. Right.
Yep.
And so have done that, built a business around it, and it has been absolutely fantastic. And we continue to grow. So now we're expanding down to Kansas City, and so really looking forward to the growth and the trajectory that we've got inside that business, really to help support the local investor.
Yeah. So let's talk about you just the kind of evolution, like, and I think what is Des Moines, like, maybe half
They
a
call
million or
they call
400,000?
yeah. I think Des Moines. I think it's fair at about 450 to 500. They call the MSA 700, but you're stretching like 40 miles to start
All
doing.
right.
Yeah, that's a stretch.
Yeah.
So 450, 500. Yeah.
Do you think, I mean, honestly, almost every real estate investor I know has not stayed focused, and they start doing other things and dabbling in other things. Your market is not super small. I mean, I know plenty of people in smaller markets, but
Yeah.
do you think that the size of that market caused you to have to kind of like change into other things and be a little more
Yeah.
broad in your approach to kind of real estate?
Dude,
Because,
it was like 2008, 19, 2020. Yeah, I got a Fuel, right, and you can echo this. Yeah, and you talk about it. You're in a major market. You'd be going, hey, you got to make 20 offers to get a deal. I mean, that's what it's going to take, right? You got to
yeah.
go out there. You got to turn a release. You got to get 21 offers. And I'd still review my numbers. You know what my numbers were? I got to make 3 offers to get a deal.
Oh, wow.
And the deals were great. It wasn't like I was razor thin, but I'd run out of people real quick on who to talk to, because there just
Yeah.
wasn't that many. I like in a month I couldn't make 20 offers. 20 people didn't exist.
Yeah.
So at some point you're like, especially coming from the world as being a real estate agent, it was 2010. I had a small team. We sold 210 homes. I was accustomed to doing series volume, and so when you come on the investor side flipping homes, which we did a whole bunch, we can always take more.
Yeah.
Right.
Yeah. 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 So
That probably led to that to go, cool. What else can we do?
right.
Can you stack additional rentals? Can we buy an apartment? Can we buy a warehouse? Whatever it may be.
Yeah.
Hmm.
Yeah. And I was just telling you, like, just we've kind of broadened real investor fuel out to
Sure.
not just be so single family based, be more of the real estate entrepreneur, because there's a lot of real estate investors that dabble in other things, or are testing other things, or trying other things, or maybe it's a part of their business. And obviously more and more common is they're an agent and an investor, because
Yep.
in more and more states you have to be, or it's coming. So why not do that as well?
Yep.
And with all the inflation and stuff like that, I mean, even a lot of listing commissions are not too far off from a traditional wholesale fee, right?
Correct. Yeah, they're
Yeah,
getting
yeah,
they're getting squeezed
yeah,
dramatically.
yeah,
That landscape has changed forever.
yeah, yeah, for sure.
Yep.
So if you talk about kind of being the bank, like, let's talk a little bit about I guess part of you doing it is, it was just an evolutionary thing of like, well, I've done all these other things and I'm kind of already doing this, so why not lean into it because it's an opportunity. You're very well connected because it's a relatively smaller market, and so
Right.
you've already. Yeah, I told you that we're thinking about starting a hard money business, and I don't want to. Could I go be one of the major players in DFW? Probably, but I don't really want to do that. I just want to keep some money busy and do it in a way to where it's a nice side hustle, but it's not like.
Yeah.
The problem is I don't need any more like major hustles because I've got too much going on.
Yeah. Yeah.
But it's a good business. Ultimately it's an evolutionary thing, I think, where you get to the point where you're like, hey, I've got some money. And so why not put it to work this way?
I've got some money. Where's it going to go? I mean, I'd buy that next commercial deal all day long, but we
Yeah.
still have like our underwriting standards from 3 years ago, 5 years ago. They didn't change, and so, but what we've seen over a period of time is that, um, interest rates have gone up dramatically and cap rates have gone up, but not at a step lock fashion. And so, oftentimes you can you can go borrow it, make up a number, borrow at 7, and I can invest it at 7 on a 7 cap basis. Well, that doesn't make any sense to me. I've got to
Right.
take on risk, and I don't get any yield over what I have to borrow at. And so,
Right. Yep.
there's other places to put capital.
Yeah. Yeah,
Yeah,
for sure. And with from a lending standpoint, that is actually my exact situation. I have a lot of money out in multifamily deals, and they're starting to come back, and there's no other deals to put it into. I'm
right.
like, I could put it in the stock market. I don't really like that, but it is a thing. Or I could lend it, that's legitimately realistic opportunity for us. So,
Dude,
but there's
this,
also a
yeah,
lifestyle component of that too, right? I
sure,
mean, the lending business is a little bit easier lifestyle wise, I think,
correct.
than certainly than rehabbing and probably even than wholesaling. Would you say that?
100%, yes.
Yeah.
There's no way around it. Yes.
Yeah. Yeah.
Yeah, you're
Talk
not
about that a
getting.
little bit. Talk about the importance of that in your kind of career of like, because at some point you just get tired of hustling too, right?
Yeah. Well,
You
for
want us to
us,
hustle
yeah,
it
yeah,
up.
yeah.
You're like,
Yeah, if for from the grind of flipping, if that world managing the contractors, I mean that's a different space. To the spot where for us it's a different hustle because if you know me, there's no retirement that's ever going to take place in my world. It's
right.
just we're going to do something else and get it to match. It may look a little different from a 9 to 5 standpoint, right?
Right.
During the working hours, but for us it's going cool. Let's build this business and let's continue to we've served investors here locally tremendously. Can we go to another place? And that's where we're headed, Kansas City. But yes, what you don't get is you're not getting a call. I mean, how many calls have I've had everything happen in the management of property for the stuff we've owned to the stuff we flip. People breaking in, people stealing stuff, people vandalizing stuff. Had a house lit on fire. I've had tenants die in properties. I've had a tenant murdered in a property. Not like I'm not in the hood here. Like first, that's a random one.
Yeah.
First one in the suburb. First murder ever took place in the suburb in 28 years. So I've had insane stuff happen from through the
Right.
ownership of property. Um, you're not getting those phone calls, right? And
Yeah.
so it's just
It might
the
be
the
happening in houses that you're a lender on, but you don't even know about it, nor do you need to know.
don't need to know, don't want to
I mean,
know,
you might want to know if it burns down, but
yeah, yeah, yeah.
there's
File that
insurance for that.
insurance claim. Make sure we've got it. Make sure the check's in the mail. Correct.
Yeah.
Yeah, but it's somebody else's burden
Yeah.
to be able to do that, and it's just the difference between the debt and the equity. All those types of things I just described from an ownership standpoint. My banker doesn't know any of that stuff, right?
Right.
When we leverage that, that's not their role in the transaction,
Yeah.
right? The
Yeah. I
role.
didn't. I just thought about it because I've had a couple houses burned down,
Sure.
uh, and one of them was a private lender that was behind it. I think we told her, but like we just built it back up and put a tenant back in it,
Yeah.
Yeah, like my lenders typically, unless they need to sign a check or
Yeah.
whatever, they typically don't know because I mean I'm not hiding it from them, but they don't want to know and don't ask, don't tell. Like we're just going to keep. The payments didn't skip a beat for them.
Sure. Yeah.
That's what you
Yeah.
really care about.
Correct. Yeah, they're just
Yeah.
you're doing your thing. You're a highly accountable investor doing your thing, and it just keeps moving on.
Yeah. One of the things that I think is, you've done all these things and now you're lending to people and you
Right.
kind of know their business, right? There's also a lot of lenders that are, they might be national and they don't know you or your market very well. They're kind of faceless. Or there's the local lender or regional lender that's just the finance person, but they've never actually done this business
Yep.
before. I mean, so I think one of the benefits that you have is you really very much are a partner
It's a
with the people you lend
significant
to,
it's
right?
a significant value proposition to be able to come in and when they open up that wall, literally or figuratively, right, and they
Right.
run into that problem that they feel like they can call because I want to be part of that solution for them,
Yeah.
whether it's anything, contractors, squatters, whatever that problem may be. Even to the spot, we've talked about I've got a couple of clients who've got, a couple dozen rentals, and cost segregation came up one day. I started uncovering their taxes. We pull tax returns from them. It's going, hey, why don't you have greater depreciation on these things? And they're like, well, tell me about that. You know what cost segregation is? I have no idea. Okay, well, let me change your world forever, right?
Yeah, yeah.
So there's ways to add value that extend just way past giving somebody dollars and cents. And then because we're local and because of the world in which it came from, we've got a database full of there's probably 20,000 people in there. We still market. We do a handful of flips a year still, but I wholesale off just as many. And so, I mean, you know who I'm calling. You borrow from us. You're the first guy. I know exactly what your buy box is.
Right.
You're the first call that I'm making when
Yeah.
it's time to wholesale something.
Yeah. Early on in my career, I used to think of like hard money lenders as like, the loan shark, the necessary evil, right? Maybe. But over time, you kind of realize like, hey, especially guys like you, it's like, well, you know who to call. You know contractors. You know how to navigate certain crap in certain cities. Like you just know stuff that very much. And what you want is that person to be successful because A, you want your money back, and two, you want them to borrow from you again. And that's how you differentiate yourself from maybe other lending opportunities out there is like you're the all-knowing person that's on speed dial.
Well, again and again and again. I hear what you're saying. Hard money is not the best solution for everybody all the time. It's an avenue, and for some people, it is the perfect solution, and for others, they'll never borrow hard money in their life, and that's okay because it's just not for them.
Right.
That's perfectly fine. For us, we got a lot of people who have to move very quickly, and when we can close in, 5 days, 8 days, because they've negotiated a heck of a deal, we can close that quickly.
Yep.
And for a lot of traditional banks where the money is much less expensive, they cannot execute in that kind of fashion. One of the things we've committed to is we're never going to do an appraisal. And appraisals slow things down and they add cost to it. I've been inside of, ready for this, Mike? Drum roll. I've been inside of over 10,000 homes in central Iowa. I don't need the borrower to pay an appraisal to get an opinion of what I think what they think it's going to be worth. I should be able to dial that in and get a really good sense real quick, based on that condition and the location of whatever that asset is.
And so they probably tell you what they think it's worth, and then you just maybe do a desktop appraisal, just run the comps yourself and say, that's cool. Or
you got it. And I'll comment on this. The best investors know their numbers.
Yeah.
And so you're right. And we spot check, and we're checking everybody, of course, running our own comps to be able to do this. But the amount of people at which we have declined, this is a key takeaway, how to get declined for a hard money loan forever. When we get people come to us and they have their own numbers and they are really ludicrous. I mean, it's black and white that it's just not right. It's going, cool, this person is not for us. And I'm not dying on this deal, they're not for us ever.
Wow.
Yeah.
Do you think those people are they just don't know what they're doing and there's no teaching them, or they are trying to be sneaky?
No, I think they just don't know what they're doing. We've had experiences where and I'll track this because we have experiences where they'll come and say, I think it's worth this. I'll give you a real life example. We had an agent who's also an investor, so they're a realtor, who's got a threeplex, and they came and said, hey, I think it's worth this. I want to do a cash out refi. We're going to go buy another property, et cetera, et cetera. I'm going, the number's so far off, man. It's just not the case. Well, they listed it for sale, and 4 months later, they are at a number that I told them I thought it was worth. Still for sale, not sold. So you're going, you're now at my number, which is 30% less than your number.
Yeah.
Yeah. The market will show you what it's worth at the end of the day.
Yeah. So Neil, you've got a lot of experience in commercial too on the investing side. I know you own a bunch of commercial properties.
Yeah.
Do you lend on the commercial side as well? I mean, that's a little bit of a different animal, but do you lend on that side as well?
We've stepped our toe in it here in Des Moines on a very small commercial deal. It really has to line up. Hard money for us really makes sense for people who are repositioning a property, because most of our money is either out for 6 months on a house. In a commercial, we'd stretch it to a year, but that's it. So it's not long term money. So
Right.
somebody really needs to be repositioning that, and so it's given the size of the market, it's not particularly material. Our bread and butter is that house investor who's going to fix and flip it, or they're going to execute on a burst strategy.
Yeah. Yep. So let's talk about what it would be like to kind of be if people. I mean, you're not alone in that. Obviously, you've been lending for a long time, but I'm thinking about moving in. I know a bunch of people that have moved into lending lately. It's just, when you have an economy that's been the way it is for a couple of years, people start to look at other things that are out there, right? And
Right.
so, if folks want, there's a lot of ways to benefit from. They could co-lend with you, which let's come back to that, but they could also just start a lending company themselves, right? I mean,
Well, they
you could
don't even
also
have to start.
a
Yeah,
hamburger shop, or you
you're,
could just invest
you're
in a hamburger
you're
shop.
totally right, but they don't have to go that far. They could just lend, meaning you don't even need a company. I think the idea of a company is you're going to do what you or I would probably do.
Right.
But if you had a few $100,000 laying around, you have a self-directed IRA or 401k. Those are fantastic vehicles to be able to go lend
Yeah.
just on a one-off basis. It's an alternative to put it in the stock market, put it in someplace else. Just go out, connect with somebody. These RIAs, the meetups are fantastic places to connect with other people, to be able to go out and just tell them what you're doing. Hey, I've got a little money. I lend to people on a one-off basis. We do one or two projects at a time type thing.
Yeah.
To do it that way. You don't need
Yeah.
you don't need a full form company to be able to do it. Connect with an attorney, right? Make sure you got your documents tightened up in terms of how you got to put together that mortgage and that note. A seasoned real estate attorney guide you through that whole process.
Yeah.
To be able to do it.
Yeah. Here's a little thing that I'm going to say that's I don't want to say I'm about to say something profound, but I am. If you have a savings account, you're a co-lender, right?
You're right.
You put money into a bank, and then at nothing, by the way, like fraction of 1% maybe, and then they re-lend it out at 6 to 10% to somebody else, and so that's really co-lending. I mean, most people don't look at it that way, but I know you do that. You have people that will come in and say, hey, they're going to lend to you at a certain rate, and then you lend at a higher rate, and you make a spread on that. Now you're doing all the sales and marketing, and you're talking to all the folks and dealing with legal issues and dealing with, God forbid, foreclosure. If you have to foreclose on somebody, you're dealing with all that, but their money's safe because they're the underlying kind of, I guess, co-lender, right?
Yeah, you're absolutely right. Yeah, we started a co-lending fund, so folks come in and invest alongside us into deals, and then we've got some liquidity options there. I mean, we start, somebody can invest $50,000 all the way up to as much as you want, but we've got some liquidity options there. If it's 18 months is as short a time frame as we can get it. So as long as somebody's in for 18 months, great. You can get your money back and move along. So if you think about, that co-lending model, somebody can earn, it depends on what one invests, anywhere from 7 to 11%. The more you invest, the higher that number gets. But call it 11% for, a couple of years. You can't get 11%, with this level of risk, which is, we're in first mortgage position on everything we do.
Mm-hmm.
You go to a bank CD is what, 3.5%, 4.5%?
Yeah.
Right.
Yeah, I just did. I might have done a CD when I was little, and my parents got us into something. I don't know. We actually invested in a CD for the first because we had. It's a long story, but it actually was a retirement account, and we moved it into the money into an LLC. So the money was with Wells Fargo,
Sure.
Not traditional retirement account stuff, but we had some money sitting there. I don't think we're going to be using this for a year. I mean, I don't see anything. It was a low enough amount that it was like $80,000 or something. So it wasn't big money to put into a deal, but it was it's just sitting there right now. And they had some sort of teaser CD, and I think it was 5% for 6 months. And of course, if you do nothing, they automatically roll it over into something at 1%.
Correct.
And that's how they get you is they just automatically roll it over. And we just ended up pulling it out. We're like, okay, I can't go. You had to physically go to the bank. I'm like, who does that? I can't do that. It was built for them, but yeah, the problem is I want to keep the money busy,
right.
And they didn't allow me to do that. So I guess maybe we should talk about co-lending to you. Yeah, it's interesting. But you know what? A lot of folks don't know, and a lot of people that are listening to this might know this, so especially if they're active real estate investors. But that you can borrow from your retirement accounts. Not a lot of folks know that. There's this whole self-directed world out there.
Correct.
Of folks that are able to use their retirement accounts, and instead of having it in Fidelity or E-Trade or somewhere else, they can actually self-direct, and either they could flip houses with it if they want to. There's some asterisks next to these things, so don't go do that without talking to somebody that knows what they're doing.
Right.
Or they could lend it, right?
Yeah, and lending. I mean, you want to talk about This gets talked about a lot in this industry is I want passive income, right? I'm going to get into this business because I want passive income. And what I found out the long and the hard way in the single family rental space is that thing is anything but passive.
Yeah,
You'll be right.
for sure.
But happy we've done it. Happy we own them. But it's anything but passive. Lending is as passive as it possibly gets.
Yeah.
And in a co-lending model, it's probably the truest. It is truly passive.
Right. They're writing a check or wiring money in, and that's that.
Correct. We keep everybody apprised. You get 2 to 4 emails from us a month. We over communicate on a monthly basis, quarterly financials. Yeah, we overly communicate to keep everybody apprised. We want total transparency in what we do because at the end of the day, it's our name on the line. And I got my own, we're co-lending. I got money right there, pretty big dollars out there. And so we want to dial it in and make sure we do this really well. And you talked about this early on. Repeat borrowers. We've drawn on our business model that we target 50% repeat borrowers. Today it's actually 70% is what we're achieving.
Oh, wow.
70% repeat borrower rate.
Yeah.
And so when we make it so easy, I'm going to liken this to your Wells Fargo story. For us, we make it so easy that they just keep come back and do this and do this and do this again. And Wells Fargo, your example was, you actually got to go do something. They make it easy for somebody not to do anything, and then ultimately Wells Fargo benefits from your one's not wanting to go in and roll out your thing. Yeah. For us, we just make it so easy for them that they don't go out, they don't shop again, they don't want to go. It is simple. They just
that's
just 70%. Rock and roll.
You said 70% of the people that you lend to are repeat customers.
Correct.
That's amazing. Yeah, that says a lot. I mean, because you have to earn that every single time, right? And
correct.
And I'm guessing we don't talk about rates, but I'm guessing you're not the cheapest guy in the world. I mean, you're the local guy. Like you could always go. The national guys are always the cheapest.
Correct.
But they don't really know. Might take them 3 or 4 weeks to close, and they don't really know you. They can't connect you with anybody that's in the market there, right? I mean, it's a very different animal for sure.
Yeah, yes, it is less expensive, but it is slightly faceless. If they pull the rug on you at the end of the day, they're just going to go lend to somebody else some other place. Yeah. For us,
there's a place for that, but
correct.
That's not what you offer, right?
Yeah, for us, it's real problematic. We want to make sure that if we're going to say yes, a yes actually means yes. We're not. There's no loan committee past us that somehow, the loan officer says yes, and that the loan committee somebody else says no, and it really means no.
I've got a lot of I've got definitely other friends like you that are hard money lenders, and they'll say right up front, there's cheaper options. I'm not trying to be the cheapest guy in town, but I'm trying to provide the best service.
Correct. Yeah, we want to be a solution and deliver values in ways that extend past dollars, right? That ultimately, hopefully, we can add some value that really works super well for folks.
Yeah, and if 70% of your customers were previously customers and they came back, that speaks for itself. That hey, it's working well for them too.
Yeah. They like it. They refer it, and you're right. It's not all about dollars and cents. When we talk about the ability to close fast, and you know this from all the years of buying properties, right? Sometimes when you can go into a seller's place and you can provide certainty to a seller in the form of a purchase agreement and certainty to close, and if you can close in 7 days, odds have it you can negotiate a better deal than if you can close in 37 days.
Right.
And when your choice is, how do I get money in 7 days to go close this deal? Yep. Well, although we charge a higher rate, at the end of the day, it may be a better deal that you've cut with that seller. That our higher rate makes total sense.
Yeah.
Oh, well, I was going to say, I love being a Plan B lender because if we get an at bat on a Plan B basis, odds have it we can earn our position in there for more repeat business from somebody. We've picked up a number of clients, a lot of times from realtors, because realtors are on the hook. They're closing a deal. The Plan A lender, for whatever reason, it's generally somebody who's not from Iowa. It bails. We're an abstract date. I don't know if you recall this from our earlier conversations years ago, but we don't use title insurance in Iowa. It's the only state in the country that does not use title insurance.
I didn't know that. Yeah, that's interesting.
We are different here. We use abstracts. We use attorneys to do title opinions, who then make up the bulk of closings. The attorneys do these. And so if you're not from Iowa or you're not built like a real national built out version of this, it's just a different world. They don't understand this. And so we've been a Plan B several times where we picked that up because the Plan A has gone to pot just days before closing, and we swoop in and close the deal. And really, the intent is earn a customer for life.
Yeah. Awesome. Well, Neil, if folks want to learn more about you, I know you've got a podcast, you've got a bunch of stuff going on.
Yeah.
And of course, you got your lending company as well. And also you have people kind of co-lend with you that are looking to keep some money busy. Like, how can they connect with you?
I'm going to give everybody a choice, right? The podcast you mentioned, the Investing in Iowa show, it's just as it sounds, right? We talked to a whole bunch of Iowa folks about investing in Iowa. Our lending business, littleguyloans.com. And then our co-lending and all of our syndication that we do on our commercial side, Legacy Impact Investors, legacyimpactinvestors.com.
I'm going to write this down so we can get it in the show notes.
Yeah, cool.
Awesome, Neil. Well, hey, thanks so much for joining me on the show today. It was good to see you, my friend.
It's always a pleasure. Thanks for having me.
Awesome. And everybody, there's a lot of ways to make money in real estate. You can be active or you can be passive. And I think ultimately everybody wants to be passive. I mean, there's nobody that's like, I want to have to work hard for my money. Everybody wants to be the bank, and ultimately, or everybody wants to be passive. And so, if you're active now and you want to be more passive, well, hopefully you got some good lessons from today. If you're not even investing right now, why not just go straight to passive? I mean,
right?
That's anyway.
Listen, well, I know a lot of people who are excellent at what they do. Doctors, lawyers, engineers, a whole bunch of professionals who make tremendous amounts of money doing what they do best. They should never leave that profession. They should just figure out how to get some exposure to real estate in one fashion or another.
Yeah. That's the other thing that I say. I just talked about this yesterday on another show. Is like everybody wants to be passive, but you have to have active income. So whether you're a fix and flipper, wholesaler, and you're making money, you got to put that money to work passively because that's what helps you build long-term wealth. Or if you're a doctor or a lawyer or somebody else, and that's your active income, here's a way for you to get into real estate passively: is either co-lend or buy real estate and let it rent it out. I mean, that's not as passive, but it does help you build wealth over time. So anyway, one way or another, get in the game.
Yeah. Mike, it's good to be here. I appreciate you.
Good to see you, buddy. Everybody, hope you got some good value from today. Appreciate you a bunch for following along. We'll see you on the next show. Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.